Hey, this is Jack from Alpha Charts with a state of the market video. Today is December 23rd, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Happy holidays. So quick little announcement. If you follow me on Twitter or X at AlphaCharts365. This week, I am going to do a preview. I figured last week of the year, it's a uh perfect week for this. So it's a free view, actually, is what it is. So this week I'm going to just give everybody for free access to my subscriber tweets. Now, there's no way for me to do that in X. So what am I going to do? I will start those tweets with the word subscriber, with an asterisk on both sides. And this way you can know what is denoted. Now, normally it's done automatically when I click a button just for subscribers. What can you expect? In-depth market report videos, watch lists, focus lists, midweek's video, midweek market note, annotated chart setups, daily market scans, a lot of times daily posts just for subscribers, chart requests, stuff like that, and much more. Much. That's so funny. Let's see if I could edit this real fast. That's so funny. Much and much more. All right, look at that. That's how we edit on Twitter. Um, okay, so if you're interested in this though, subscriber, right? Just go on my name, click this link, click on subscribe. It's $10 a month, super, super cheap for this amount of research. And my subscription group has been doing really, really well. Knock on wood. I've gotten amazing feedback from people. Just absolutely blows my mind away, to be honest with you. So we're real. I'm real proud of that. So anyway, if you're interested, just follow me this week. See what it's about. If it works for you, if it's right for you, for $10 a month, it's a no-brainer, right? So it's a way for you to know whether, without any kind of no strings attached, right? This week. So at AlphaCharts365, make sure you follow me on X, Twitter, and you will get all that. Period. All right, let's get into the charts. Starting with the SPY. Zooming out, great pattern, right? Great looking pattern. I highlighted this bar right here, July 27th. I think this is a major change of character bar here. And we have a similar enough looking bar here, and a similar enough, if you look at this type of situation, that I think we should take notice. I think that this may have been a take notice day, not a get bearish day, but a take notice day. Notice how the trend line, all the trend lines were fine here. Everything was good here. All the moving averages. Same thing here. Riding the 9-day, riding the 9-day. Here comes the 23-day, right? If you cover up and this and this, and even up to here, everything's fine. Up to 3 days afterwards, right? And then things fall apart. Some, quite a bit. It started to decline that ended up with a pretty good size decline. And again, I'm not saying that's what's going to happen here, but it's a take notice day. So I think that's what we should be doing. And accepting the feedback the market is going to give us over the next couple weeks. This week will be very low volume, and it's going to be hard to glean specific information from this week because of that low volume and so many traders are on vacation, but it is still price action and we still have to take it into account. Anyway, so makes me a little bit more cautious because of this bar right here. And so far, all we've done now is print 2 days inside of that bar, right? So it's just really 2 consolidation days. Hasn't really given us a firm understanding of what the next move is going to be, right? So I think we need to be aware of that. All right, but it was a good week overall. Up 0.91 right into or right near all-time highs. I mean, that's always nice to see in the equal weighted RSP. It was up 0.44, so a little bit less. Again, printed an inside bar of this big bar, which is fine, and it was in the upper range. I think that's bullish. It's above this area. I think that's bullish. That's why I'm not getting like bearish from that bar, but I'm paying attention to it, right? If the market starts to break moving averages, well, it won't be the first time that I'm like, uh-oh, this could be a problem, right? So anyway, so we have this pretty big area right here, 155-ish or so, and price is above it. As long as price is above 155, I think everything's fine. Obviously we see a decline in volume, and I'm sure we show this on almost every chart coming into the holidays. That's fine. I mean, it doesn't bother me at all for this time of year. So above 155, RSP is good. Looking at the Qs, Qs have literally the same type of look as the S&P. Um, we can kind of draw boom, boom, and then, this one's a little bit harder to draw because this is like, you could say, well, it's a channel, right? It's what you say, or not quite a channel, but there's your megaphone right there, right? It's kind of rising and widening. So there you go. So it has a megaphone right into, or actually right at all-time highs. It actually achieved it. It's right there. So again, you can't argue about all-time highs, right? That's a good thing. You know, um, Back in July 27th, that was the bar that I'm talking about. It's this bar. And again, price was doing fine. It was really above all the moving averages. Nothing was really screaming here that there's a problem, but there was obviously. So we'll see. Again, I'm just taking notice. Qs were good on the week, up 0.86, after a gigantic run. Look at this run. We went from 18, 19% over these few weeks, right? Since November. So we've been in a bull run now for 2 months. That's a long time for a bull run. Not that it has to end. It doesn't, because you see this one you know, was much further, right? So nothing says it has to end, but 2 months is a pretty good bull run so far. Looking at the equal weights, it was up 0.8. So again, nice run. And again, above this $80, 80, 81, this range right there. You see the cup and handle right here, if you on the weekly, there's your cup, right? And there's your handle. Again, went a little deep. Is it a perfect cup and handle? Absolutely not. Way too big, way too deep, whatever. But it has the idea of a cup and handle. It's definitely, faulty. But what's not faulty is the giant breakout, and now it closed in the upper end of the range on the weekly. On the daily, you can see how it's just kind of moving sideways here. Maybe it needs to pull back a little bit. I drew this in there probably last week. But it could also mark time and get off this overbought situation with just sideways movement as well. So we'll see. We'll see if, how that works. But one thing I do know is that if a decline is going to start, it's going to have to break our 9-day moving average, the yellow line. It's going to have to break our 23-day moving average, the orange line. It'll probably have to break the blue line, which is the 50-day moving average, and the red is a 200-day. So if we see price slicing through these moving averages and they start to turn lower, like in this area, see how price was slicing through the moving averages and they're starting to turn lower and crossing each other and stuff like that. Like, we had tons of signs. Maybe this was a sign. Maybe crossing the 50-day is a sign. Then look, it's just riding the 50-day lower, right? So again, there's lots of signs before you realize, oh, the decline capitulate down here, that there's a problem way up here, right? All right, mid caps. The $500 level ish, right? 500, 510, up this whole area. It's a big deal. It's right there, right? A break higher from here would be amazing for mid caps. Again, looks It's equal weighted, so it looks like all the other equal weighted charts moving sideways, moving averages catching up, riding the 9 day. The 50's crossing the 200. The next week it should do that. Um, that's all very, really positive, right? There's nothing to be bearish about at this point yet. I don't see anything. So again, day of caution, but not a day to change positioning or anything like that. It just, just hey, take notice of it, right? And sometimes these days you take notice of and they don't turn out to be anything. But we always have to be on guard because again, the way I look at our accounts or my account is I want to protect the account balance first and grow my account second, right? Because I can't grow my account if I have no account balance. So taking care of my account balance and making sure that it's protected is my job number one. Um, Losing money is not what I do. Right, I always try to do, right? Everyone loses money on some trades, but overall, if I lose too much on my account, then I can't be in the market. All right, looking at IWM. Um, right here at the top of this range breakout area, just like all the other charts, right near the really the tipping point, right? But it hasn't quite tipped over yet for me. Hasn't quite broken out. A lot of people say, oh, it broke out already, right? Because they're looking at this 200 area. But really, when you go back a little further, you have all this supply in here, you have this in here, even though it's, a year and a half ago. I think it's still relevant. Obviously, price got up there and pulled back a little bit when we look into this area, right? But it's doing everything right, just working off these overbought conditions. Yes, you have, this and you have this, just like every other chart we had, because this was your take notice day, right? And it just means increased volatility. When I draw these megaphone patterns, or whatever you want to call them, widening patterns, it just means that there's volatility coming, most likely. Now, it could break up or it could break lower, right? And so if it breaks higher, that's wildly bullish. We'll have to see which way it just decides to break. But definitely it's there. So we should be paying attention to it. But it looks really good. Russell and on the week up 2.28, again, leading the market. This was some analysis I did for subscribers. I move this around actually. Here. Anyway, point is, this was opportunities for shorting on the weekly time frame, and we can see how this is breaking out of this range right near the top end of it. But again, everything looks really good. All right. All right. So here we go. Let's start with financials. I always start with financials. Financials broke out of this area that is super bullish, and now is just doing a little kind of pullback. Again, above the 9 day, above the 23 day, above the 50 day, 200 days starting to turn back higher. That's a bullish scenario. Even if it came back and tested the 23 day, that would still be a bullish scenario. If we start to get below the 23 day, that's kind of like my line in the sand for me, for my time frame. But right now, everything looks fine. Looking at semiconductors, SMH broke out to all-time highs, led the market higher. That's really, really good. Now here's you know, there you go. That's kind of like, um, the flag, if you want to call it the flag. We do have the same bar that was pretty significant, actually more significant on SMH than it was on almost anywhere else. And you can see how it looks different, right? So yes, we're going to take notice to this bar. You can't not take notice to it, right? But things are kind of on a closing basis. Let's just change that to a line chart. You know, you see how it's basically sideways on a closing basis, right? Especially if you take this day out, we've gone almost nowhere. So we got to treat this like a bull flag until it's not. right? Because that's the way we see it. Now again, if price gets below, I would say below 169, that's gonna be a problem, right? That's a problem. But as long as it's above 169, SMH looks good. On the week, it was probably flat. Let me see. Let's see what it was on the week. Okay, it was down just a little bit. So there's a little bit of a divergence. But again, after being up 7%, it could use a consolidation week, right? Maybe even two. Maybe it does something like this. Very possible. Equal weighted, equal weighted was up 0.37, but has not broken out yet of that area. Let's go into equal weighted semis right there for the breakout. Quite hasn't quite happened yet, but again, starting to get a very bullish look to it. Um, and I think semis are a place where we can spend some time looking for opportunities. Love the way this is looking, especially if it breaks out to 30, 228, 230, something like that. Let's call it 228. Um, everything looks fine. I mean, this big nasty bar only came down to test the 9-day, even though it lost 3% that day. So again, nothing is broken yet. Just take notice. Transports, FedEx was terrible. Um, probably it was probably on this day right there where it closed really low, but they just came right back. Still have not broken this long-term trend line in transports. So what are we seeing? I'm seeing a lot of things that are at potential resistance that haven't broken out yet, or just a kind of consolidating right there. Gives you a little pause, a little caution until they break out, which could be, listen, could be Tuesday, right? Markets are closed on Monday, could be Tuesday, but that's what I'm kind of watching for there. Um, and let's see, where's UXTN? Right below it. Um, Equal weighted transports, you see, did not get hit nearly as hard because it doesn't have the weighting to FedEx from its earnings. But again, it's doing everything right. It's participating. Doesn't look anything like there's any concerns here. So transports look fine. Looking at housing, nice little consolidation right there. Prior trend is higher. This should break higher, should bode well for housing stocks in general. But overall, again, a very bullish look on the pennant right there. Um, and so there's again no reason to be bearish at this point. And looking at XHB, it looks exactly the same for the most part. We have that and we have that. So again, as long as it breaks higher, very, very bullish for housing. If it does break higher, and if it doesn't, if it breaks down from here, this would be an expectation breaker. This would say, okay, we have some other problems going on that, in housing and maybe in the broader economy if this does break down. So expectation is higher. Doesn't mean this is the perfect, this is it. Maybe it needs to consolidate another week. I don't know. But right now that's what it looks like to me. And everything looks good, right? Everything looks good. All right, let's take a look at the internals. Going to the VIX. VIX is 13, right? So we had the spike up and then it came kind of right back down. You can see that it's in a bullish range. Nothing to dislike in this area. Bullish range right here. You see it did spike up in this area, but came right back down. And looking historically, you see it can stay in this bullish range for an extended period of time. And we're kind of seeing that right now. Very similar to any of these, like here, you have a spike and you come down. Here, you have a spike and then you come back down, right? This was COVID. This was a big spike. And some of these spikes are bigger than others, no doubt. But, look here, a little spike up to, 20, 27, 25, 27, somewhere around there. I'm sorry, 21, not 27. 2021, and then right back down. That's kind of what we have going on here. This is probably the most similar that I could find, at least right now. So We expect a little spike back up, right? Bearish times potentially, and then coming back down for another longer bullish time. So just normal price action. Looks good. Nothing I'm worried about there. Looking at credit spreads, right? If things are going to fall apart and the end of times are coming, credit would most likely be affected. And we have just the opposite of what you would want to see if you thought end of times were coming. We have tightening of credit. We have narrowing of spreads. This is a bullish look, 100% bullish look. Nothing to see there or be worried about there. Put call ratio, people are leaning bullish. There's no doubt about that. People are leaning bullish, but not to an extreme, in my opinion. I think there's enough fear and gloomers and doomers in the market right now that things are okay. Looking at percentage stocks above the 50-day. So if you want to be concerned about something, I think this is what we need to be concerned about, right? So this is the point where you say, okay, things are overdone. Um, and 84% of stocks are above their 50-day moving average. Now you can see we can stay up here for a period of time. And actually what's funny is that this was December back in 2020 and 2021. So you can see how it was absolutely fine to stay up here for a period of time. You see here, it was absolutely fine to stay up here and it got even higher, right? Things don't turn on a dime, but eventually they do turn from here. Every one of these had a pullback that eventually happened. I'm just worried about not worried, but want to see. Yeah, here's 2013, the most similar time on the VIX. And you can see how it stayed up here for a while, right? And kind of got up here and pulled back, got up here, pulled back, so on and so forth. Anyway, this is where we are now. And so we should be expecting at some point in the future this pullback to happen, especially when we get up here. So again, you want to have some concerns. Again, it's not a timing mechanism. This is, because none of these are, as far as, the internals go. But it does say when things are overdone, not that they can't stay overdone, but every time we saw in here after a stint, staying in this red area, we've seen pullbacks. Yeah, it could be, a couple weeks, could be a day, 2 days. It could be, different timings. But we've been up here now for, a week or two. And we could say another week or two potentially. But if we start to break down from here, what we've seen, decent breakdowns. So it just means that we're out of a bullish time and more into a bearish time. That's something that I actually talk about a lot with our subscribers is when it's to push the gas, right? And when it's time to start stepping on the brakes and raising cash. That's a big theme. Anyway, I want to spend a little bit of time here on the percent stocks above the 50-day because that is probably, if you are worried, this is probably the biggest worry we have. Looking at the dollar, and we'll wrap it up at this point. Dollar and 10-year. Dollar broke down. I think it's a very, very bullish, and it's what it's supposed to do. This 100 to 101 area, this is potential support. So now we could put together a few different things. Very low VIX, which is fine. Stocks are overheated, maybe going to get a little bit more overheated. Dollar coming into support where when we have in the past seen bounces on the dollar. So if all of those things start happening at the same time, what kind of market conditions can we consider? And it would be probably more unfavorable to equities with a rising dollar, overbought conditions, and VIX very, very low. So, as a contrarian. So again, watching, nothing to act on now. We're not quite there, but as the dollar comes into this area, if we stay overheated and yada, 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 again, is a place to tighten up stops, maybe take some profits, and so on and so forth. Nothing wrong with that. We talk about that a lot, taking profits when we have them because they're not guaranteed. And then looking at the 10-year, which has been doing very well, and very likely the small caps have been benefiting from that. They continue to move lower. Again, bullish scenario if 10-year is declining. We were at 5 and now we're at under 4. Amazing how fast this is moving. Crazy actually, the magnitude of the move that it's been doing. But that being said, bullish conditions. So going back here and going back to the SPY, I think we're going to continue with the bullish outlook. Nothing that says don't. There are some concerns as far as a concern, how overheated the market is, the bullish sentiment, right? I think people are leaning bullish, not overwhelming bullish, but leaning bullish, and there is room to run on that area. So there's some concerns, and what would I say? I would say, hey, listen, if you're up big, take a partial off, right? It's okay if you take a piece of it off, tap into some profits, right? To put them in your bank, right? Put them in your trading account. Maybe raise a little bit of cash, right? If you do take some profits. If things start stopping out big time on you, that's feedback from the market. Accept the feedback, right? Maybe raise that cash, keep it there as we decide what's going to be happening. A lot of things are consolidating right near these resistance areas or potential resistance areas that are showing to be maybe resistance areas. So we have to be careful of that, okay? There'll be more videos. Again, this was a little bit longer, a little more in depth because it's made not only for everybody but also for the subscribers. Tomorrow we will do again all the subscription stuff. If you're interested in it, go ahead and again, click on the link. You can subscribe. If you this is a great time to see if it's right for you. If it's right for you, for $10 a month, it's a no-brainer, right? I mean, that is like, yeah, if can help you for $10 a month, it just makes sense. And again, from what my feedback has been from my subscribers, I think you guys are gonna like it. All right. Hope you're doing well. Take care.